Welcome to Breaking Banks.
The party goes on. Or does it? Are we back to normal? Or is this just the calm before the storm, before things go really crazy? I sat down at Money 2020 in Las Vegas with Nick Chandi, CEO and co-founder of ForwardAI, which was built to solve small business cash flow problems. It's difficult for small businesses to share their accounting data with banks and other financial players to improve access and speed to secure financing. Nick talks about ForwardAI's API that enables an easy way to share data and bridge a gap for financial institutions, lenders, and other fintechs to help SMBs stay financially healthy. But first, Jason kicks this episode off by diving into one of his favorite topics, Interchange. In a conversation with Jason Mikula, editor of Fintech Business Weekly, listen as the two Jasons discuss payments, rewards, mobile wallets, and the rise of embedded finance.
All right, Vegas, the party goes on, Jason. Does it feel like the sentiment was, oh, the party's over? It doesn't feel like the party's over. But is the party over? It's a different feeling here at Money 2020.
The vibe is different than last year. Better in the sense that, there's no COVID, allegedly. But funding-wise, maybe it's a little more temperate than it has been in years past.
That's one thing that struck me is you no longer see like the, mass people from a single company, like the entourage of Chase and the PayPals, right? Where it's like, holy, how many people do you guys have here? And it seems, even though it's like 11,000, maybe 12,000 registrants, it also seems not quite as crowded and not quite the same vibe that it's been in the past. And I'm not saying that it's a bad thing. It just feels a little bit different.
I think it's because there are a lot fewer crypto people here. Last year, it felt like a solid third of the exhibitors were sort of crypto or crypto adjacent. Definitely a lower proportion from that segment this year.
So we're not getting the, I just want a vibe here?
Fewer vibes, fewer crypto millionaires, maybe?
Okay, that could be. Now, one of the things that I do think is different is, while there still are some of the big parties, it does seem much more business focused than it has been in the past.
Yeah, and I think that reflects like the broader theme of reality has struck. It's harder to raise money. Unit economics matter, discipline matters, and I think maybe people are a little reflecting that in their approach to the conference.
Well, I want to disagree slightly in that it's not harder to raise money. It's back to normal in raising money.
Yes. That is the right way to put it. Yes.
Right. And so when you see all of this, the good times are over, it's like, no, reality has come back. Right. I think your unit economics piece is a really important one.
But the FT Partners deck that goes out every month with like number of deals and dollars raised, somebody posted it and said like fintech funding, crashes dramatically. And it's like, actually, no, if you look far enough back, it's just a reversion to the mean. It's what it was before sort of 2020, 2021, when it went crazy.
I was going to say, you don't even actually have to look that far back. I know the chart you're talking about is like you go back 3 years and you draw the line. You're like, oh, we're back on the line.
Yeah, we're back where it was before everyone went crazy.
Yeah. Well, so this thesis of, everything is a fintech and fintech can change the world, there still is a bit of that vibe. How are you feeling? Like when you look at the marketplace, are you optimistic about fintech?
I'm going to use my classic talking point here, which is there are companies that do financial services and happen to use technology. And then there are fintechs that are technology companies that sell to financial services companies. So if you want to use the picks and shovels metaphor, if I'm thinking broadly about the space, neither of these are going away. I think that the more consumer-oriented fintechs, so the ones that are financial services that use technology, are probably in for more pain than the quote-unquote picks and shovels companies that may have a broader set of customers they can sell to in in fintech companies, but also establishment banking and other sectors.
So call this a out too late in Vegas, us huddled in a corner recording this, jaded. Something I've been wrestling with the last couple of weeks is I feel like fintech has become too much of its own bubble and we're drinking too much of our own Kool-Aid in terms of the impact that we're actually delivering. And while it's interesting that now Chase is allowing, 2-day early access, to wages and copying the fintechs, I think of something Shamir Karkal said 2 years ago to me. It's like, when we look at it, it's like, really, we're 2008 Perk Street, 2010 for them. It's simple. This is how far we've come. And I feel like technologists are taking this very interesting view of, here's the problems we're solving, but are we really solving really meaningful problems in new ways as fast as we could?
That is a loaded question. if ever
Disclosure for any of Jason's clients or people he writes on.
If ever I had heard one. I think to your point about Chase, huge establishment banks don't need to be on the cutting edge of innovation. They can, in a sense, outsource that, let players like Chime and Vero and Current and Cash App, test these things, see what consumers respond to, and then just copy them. And so I think, in aggregate, has fintech and also, regulators and legislators pushed establishment financial services companies to improve some of their product offerings. So things like 2-day early direct deposit, lowering or eliminating overdraft fees, NSF. You have seen progress here. I think some of that is attributable to, startups that were competing for certain segments of their customers. On the flip side, you look at what Chase is doing, they are charging money for that account because it is not free to open and service a checking account. And without certain fee income and relatively little interchange income, Chase is a business and they want to make some money somewhere.
Well, I think you're striking at one of the things I think is one of the biggest problems, particularly in U.S. financial services, the concept of a free checking account, right? Because it is not free. We're just hiding what the true pricing is. It has to come somewhere else. And consumers have been conditioned that it should be free. And, the adage of if you aren't paying for the product, you are the product, right? And I think free in financial services is done so much damage in that regard.
No, I think that's right. When I moved to the Netherlands and went to open my bank account, I was like, wait, what? I have to pay €8. I have to pay €8 a month for this? But it reflects, that probably not even covers the entire cost of offering that product, particularly given that, where I bank doesn't actually do lending, it's a neobank, and interchange is much, much lower in the EU and specifically in the Netherlands than it is in the US. So breaking that habit for American consumers, I think is borderline impossible. That and like credit card rewards, right? Some of the stuff happening right now around, so-called Durbin 2.0, and there's some other debit routing related stuff. It's consumers are addicted to their rewards points.
Well, interchange, one of my favorite topics to go after is, I'm curious your transition, to the EU where, interchange is relatively non-existent. Also the use of credit cards, is dramatically different. Was there this psychosis, this disconnect in terms of your American brain moving to the EU?
I went through a transition phase because at least I was in London for a year, which is kind of actually
somewhere in between.
You do still have co-branded rewards cards. People use credit. But it was an adaptation. I like to joke that, when I first started visiting the Netherlands, you go to the grocery store, they do not accept Visa or MasterCard. They use sister networks. I want to say it's Visa Plus and then Maestro. And the interchange I think is a flat 2 cents a swipe.
Yep.
So there is no interchange business model to be had there. I guess as a rational consumer, you look at it and you hope that that's reflected in lower prices on the product that you're buying, because the merchant doesn't have to mark everything up to accommodate the swipe fee merchant discount rate.
Well, and so let's pull on this. We're addicted to rewards. I want to say it's the Federal Reserve Bank of Atlanta had published this, that most consumers actually lose out on rewards programs, because if you're spending on, and I want to say the breaking point was like, if you make less than $115,000 a year, the amount you will overspend thinking you're getting rewards relative to the value you get from the rewards, right? Because it's all some value that's off in the future, that you're just never going to capitalize on it. And so it's interesting in this Durbin 2.0 to read some of the marketing and say, they're coming for your rewards, right? Like, as if the government's trying to take it away from you. And the reality is you probably weren't getting those things in the first place.
And also, there are these implicit cross subsidies from lower income people to upper income people, right? If you're using your Amex Platinum or your Chase Sapphire Reserve, which is charging the merchant a higher interchange rate versus a lower income consumer who might be using a debit card, but everyone presumably is paying the same price. So you're implicitly seeing this transfer of wealth from lower income, lower spending consumers to upper income consumers that have a more premium credit card.
Premium credit card spending more, right? So the bulk of what they're doing in terms of the piece of the pie they're taking is disproportionate.
Exactly. Yeah.
So do you think interchange ultimately goes away, and is it because of Durbin 2.0?
I mean, it's proven surprisingly durable. If you talk to technologists and then particularly people in the sort of crypto, Bitcoin, maxi world, the argument they make is that the logical endpoint is that payments become ubiquitous, instant, and either free or nearly free. But we're actually not seeing that progress happen in the traditional payment networks. You haven't seen rates lower due to competition, Visa, MasterCard, and actually the opposite. You've seen rate hikes in certain geographies. So on the one hand, you would like to believe that progress would lead us in the direction that some of these crypto people seem to think it will. On the other hand, it's not just the technology, right? It's the who has pricing power and enough control of the market to, drive the outcome that's beneficial to them. And historically, that's been Visa and MasterCard.
So I don't think it's going to be a legislated change. I think it's the ubiquity of things like Apple Pay. And Amazon checkout, and like when Starbucks finally decides to make me CEO because of the amount of money, the first thing I'm going to do is change the Starbucks wallet into a point of sale. Piece, a mechanism. And I've become addicted. I know you've been a long fan of Apple Pay, but I find myself, it finally have crossed the threshold that it's no longer a novelty, it is actually my go-to spending source. And so at what point do they say, wait a second, I don't need to just be a front end to the cards, right? Like I can actually own the whole thing.
But I think that's a really interesting argument, and potentially not just for Apple and Apple Pay. Obviously Apple has a significant advantage in that it owns the hardware layer as well as the operating system software layer, and that gives it a lot of control and a lot of reach, a lot of distribution. But the idea of creating new, closed loop or semi-closed loop networks that functionally compete with incumbent Visa, MasterCard may be the most likely way that you see competition increase and potentially pricing come down. And I think another good example is what Block is doing with its sort of Square and Cash App ecosystem. And you've seen slow and steady progress of using Cash App as a payment mechanism, first only at merchants that used Square, and now more broadly, I want to say they've partnered with Adyen to allow Cash App users to pay using the app.
Yeah, and I think this growth in wallets, wallets have been hyped for so long, and we can pick on like the super apps, but I think this idea that we've all gotten used to now having multiple wallets. There's not one wallet to rule them all, but I'm willing to store value in lots of little places that provide value to me, and I think that's part of what's going to drive the interchange race down. Is you don't need to compete with Visa or MasterCard head to head. It's this idea of I'm going to start loading value in different places, right? And I'm going to get value for having loaded the value in different places.
I mean, my thesis is that the entities that are going to be most able to execute that strategy are the ones that are high touch, high frequency. So your Starbucks example is a perfect one. And the ones that create an incentive structure that's tied to it. Again, Starbucks is a great example where, okay, you're going to go there. How many times do you go a week, Jason?
You don't want to know.
Is it more than once a day?
Sometimes. Most times. Yes.
Okay, so you're in Starbucks 10 times a week, spending, I don't even want to know how much. Let's call it $5 a pop. But if you're doing that from the wallet that you've preloaded via an account-to-account transfer, ACH, and sort of low-cost funding mechanism, and then Starbucks is rewarding you for paying that way by giving you whatever, a free latte once every 10 drinks, like they've created incentive structure where at the end of the day, they're still saving money on payment processing.
They're saving a ton of money. They're driving increased behavior, right? Because given the choice between running back to the office or popping into Starbucks, having a coffee, and working for 2 hours, guess what I do? Right. And yes, I do have a lot of Star rewards.
So it's your default office away from office as well.
It is the office away from office. But, it goes back to, I think, part of this trend is, I think this next wave is not going to be the rise of the fintech player. It's going to be the rise of the commerce player that is becoming more fintech focused in what they do. Walmart is obviously making big moves there. Amazon has already been a player there. But this idea of embedding, the financial service layer into other behaviors is, I think, what this next wave is going to look like.
Yeah, I mean, why do I open my banking app? It's usually to check my balance and see if I have any money. But that's not fulfilling a need, right? Fulfilling a need is I need to buy this purchase at Amazon. I need to order Uber Eats. And so moving the financial experience from inside my Chase app or my Bank app and putting those capabilities where I'm actually trying to execute some kind of transaction, I think is the direction that things are slowly moving.
Yeah. It'll be interesting to see the evolution of Money 2020. Does this begin to look more like a commerce conference and less of a financial service conference, as that evolution takes place?
That would be really interesting. I mean, you imagine, some combo Walmart one exhibitor or contingent of people. I would be surprised if people from Amazon aren't here.
Oh, they're always here, of course.
Yeah, they're somewhere. But, moving more center stage and having that sort of driving some of the dialogue and discussion.
Less the periphery, more actually the main dialogue. Yeah, absolutely.
Interesting.
Well,
I can see it.
Yeah. Well, let's see 5 years from now if that thesis holds up. But thanks for taking time on an early Money 2020 morning to catch up on all things fintech.
Anytime.
Introduce yourself.
Okay, first of all, thank you, JP, for having me here. I'm Nick Chandi, CEO and co-founder of ForwardAI.
Okay, ForwardAI. So what problem are you solving?
We are a technology company and we plug into all major accounting systems. And the problem we are trying to solve is today it's very difficult for small businesses to share their accounting data or business data with the banks, lenders, or other fintech players to get better products or services from them. And we are trying to connect them in an easy way so that it's making it easier for them to share their data with the bank.
Right. So why did you decide to tackle this problem? This come from a personal experience?
Yes, the genesis was during this pandemic. What happened, we had a successful exit in 2019. And let me step back a little bit. I spent all of my adult life, I would say, working with accountants and bookkeepers. And we built one of the largest IT consulting company in Canada that was providing services to accountants. So we had very deep understanding how these accounting systems work. And in fact, we built one accounting system similar to QuickBooks Online, and that where we had more than 40,000 small businesses using it. So we knew the domain very deeply, and we after selling that business in 2019, we were looking for what to do. And during pandemic, I happened to work with many small businesses, hundreds of them, with their PPP loan applications. But few of our clients, they needed help more than that. And we tried to get them help from the banks and other lenders, and we found it was very difficult to get help that time. Obviously, some was due to market conditions, but otherwise we saw the banks were still looking for 3 years of historical data and business projections, and because they want to see that predictable revenue stream, right? But the reality is, most businesses, they don't have business plans, right? Even if they do have it, it's meaningless for the next 3 years, right? So yeah, they were still looking for credit score or those kind of things. And what we saw, we worked with a fintech, and we saw they had direct connections to accounting systems, and they were lending all the time. So they were able to help few of our clients. And that made us thinking, okay, how we can leverage the knowledge we had, experience we had building these accounting systems, integrating with them, and how do we bring on a global scale. So we took our knowledge, we re-engineered our code, what we knew before, and we provided our solution as an API. So today we connect with all major accounting systems that are being used in the North American market. We can pull data from them, we can push data from them. So it's a bi-directional data flow, and it's all happening through a single API. It's very easy to share data. The way banks or lenders, they request access to our data is they request inside the main customer journey. So it's a consumer permission data access. So anytime data is shared, bank will get full access to the data. But they also get an opportunity here. What we do once we get the data, we clean and we standardize it, and we also provide, we predict how the cash flow of the business is going to look like tomorrow, next week, or in 6 months. So that cash flow forecasting has been very popular among small businesses as well as lenders, what we noticed that.
Well, that's what I was going to ask. So that has two different use cases, right? One is for the small business themselves. It can be helpful because, as you said, many of them don't really have a cash flow forecast or really understand what that looks like. It's really just cash-based accounting. Are the lenders using that, or do they have their own model? I can imagine a lot of banks saying, no, we don't trust your forecast, so we're going to do our own modeling.
So we are working with one of the largest bank in Canada, and they are currently going through a POC, and they plan to introduce our cash flow forecasting to their clients. And they're doing the testing and modeling and everything, because the way our technology works is we can provide cash flow forecasting as an API or also as a white label platform in case they want to offer, with the bank branding, bank logo theme and everything. So a small business will feel like they are on the bank website. But because some banks, they don't have access to developers, for them that's a great solution. But if you have access to developers, then obviously integrating through API is the best one.
Why has it taken us so long to get here? It is such a manual and paper-based process today.
Yeah, it is, and it's a huge problem. It's a huge problem, and that still need to be solved. We see there, small businesses, still when they need to take on a new job, or you are a restaurant and you need to add few tables, and you apply, and it's going to take days and weeks to get any decision from the bank, right? And that doesn't help because you need money today. And you don't rent a movie today on Friday night to watch it on Tuesday, right?
Right. Not anymore.
Not anymore, right?
Yeah.
And we live in a demand-driven economy. We have Uber and everything, but somehow the experience on the business side is still very, very poor. And I believe that's changing now, JP. What we have seen a strong interest from lenders and banks. Many companies, they were still doing paper-based kind of thing, pile of PDFs, but they are looking at this kind of data. But that's changing. If you look at company like C2FO or Soup Funding or or Fintech Automation, the PR that we recently announced about, these companies are forward thinking and they're trying to bring real-time access to the banks and other players too.
So talk about how that fits into banking as a service or fintech as a service. I mean, obviously, being API driven is a important precursor to that. But talk about what does that look like going forward? Because that's different than just being the kind of provider in between the small business and their banker, right? Because what will this enable?
What this enable is it can empower banks to provide proactive services to their clients, because think about a day when the data shows up on the dashboard of bank staff and they can do a lot of things. They can see first of all, they can see immediately which businesses are going to qualify. They can automate certain part of the process. I guess more than 90% for sure. They can pre-approve those businesses. They can do other things like what we know that a small business, most of the time they have multiple financial relationship. They might have a bank account with one of the major bank, maybe dealing with community bank, might be using Stripe, right? And all this kind of data is visible in the accounting system. So it's possible today a banker to pick up the phone and see that Nick has 100K sitting with the other bank, a competitor, and maybe it's time to talk to them and asking them to open a saving account with you on the better terms. Those are the kind of things they can predict which clients are growing and at what rate, and in the accounting data they can see that their marketing is going up, but at the same time their sales is also going up. So they will be able to identify those kind of opportunity and they can automate it. And I believe that's a way better way than sending a spam email to millions of businesses and asking
same message to everybody.
Yeah.
Right. So obviously both pieces are important, right? The small business, which gets the data, and then the banks. But kind of through your business model and your sales model, where are you focused more on enabling the small business to have this data, or is it more about giving the bank those opportunities that you talked about?
Currently, we are opening this opportunity for the banks and lenders. That's where the focus has been. Okay. And because it's very, very hard, multiple massive issues in getting funds today, and the user experience is poor. A lot of small businesses, they still go for expensive solutions like merchant cash advance. That's a very, very expensive solution. But, they make mistakes because fact is 74% of small businesses, they don't have any kind of formal financial education. They never went to school and studied accounting or finance. Right?
And they didn't start a business to become a CFO.
For sure, yeah. They are in the business of making those beautiful cupcakes, not in checking their books. That's the thing they don't enjoy, right? But despite all this innovation in the space, the trend has been slow. But I think we are going to see the effect because the rock has been thrown, and the ripple effect will be happening in the next few years. I believe, based on my conversation with banks and lenders, in the next 5-10 years, building integrations with accounting or commerce platform payment systems, it will be ubiquitous. We'll see it everywhere. That's where the trend has been. And I know some FIs, they might ignore it, but they will become dinosaurs of our industry.
Well, I was talking about this with somebody the other day. case for me is kind of going back to the early 90s when we first started to digitize transactional data. And most banks really thought that was a cost savings opportunity. Oh, great, now we don't have to print out paper statements and mail them out. But once you digitize that, you have a lot of data and you have a lot of opportunity to use that data for different things. And that's kind of where we are today with the space that you're working in, where, many of these small businesses also only even use any kind of accounting platform because their bank asks them to.
Yeah.
Right. Or at least produce any kind of reports because their bank asks them to.
That's right.
So it seems like there's an opportunity to uncover new use cases, for both the bank and the business customers.
Yeah, today, if you look at the market, today, because with the more and more digitization happening, today there's no reason for a small business to visit a bank. Honestly, their customers are they're chipping away because of the embedded finance or other platforms like Shopify or Square or even QuickBooks. These accounting platforms, they are also trying to become banks, or they're at least offering services that are very similar to banks. Right? So what are the options for bank? Either they offer something that's more engaging so that they can upsell, cross-sell. It's 5 times much cheaper to upsell or sell new product to existing customers than to a new one. And that's one option for them. Otherwise, they will have to go to the platforms where the customers are, right? So I think that the technology today enable them to bring the customers back and look at the data, make decisions based on the data, and filter out which are the best customers and help them at the right place and offer them whatever they need.
What are you finding in terms of demographics? How big is the average customer that seems to be in the sweet spot for you? What kind of revenue or number of employees or any other characteristics that you've seen so far?
Yeah. So from our customer perspective, a bank or we call them partners, enterprise partners who are integrating these, and we see for their small businesses they have any sales between 1 million to 50 million. Those are the businesses that are connecting or that are using our technology to share data with the bank. Company-wise, we are more than 60 plus employees, and we all 3 co-founders. We are based in Canada, but our team is globally distributed, some in Canada, some in India and the USA as well.
Yeah. And how about, so you're in proof of concept with one bank now, others in the pipeline. Is there a thought on what kinds of banks or where they're located or their focus or anything that is a better fit for you?
What we have seen is based on its company is new. We are only more than 1.5 year old right now, and we have clients in the US, Canada, Australia, New Zealand, and UK. And big difference here is we are eating our own dog food here as well. The cash flow planning that I shared with you before, we also provide as a kind of service, free service to small businesses and accountants. And they share their data with us so that we can perfect our models, and in return they get a platform where they can see their cash flow, they can do scenario planning or those kind of things. And what we see that there's an interest in these markets more around that one. So that's where we have thousands of customers using that free platform, and I think
when we say customers, those being accountant
or businesses.
Okay.
Yeah.
And so not only is this available to those doing their books on their own through a QuickBooks or Xero or something like that, but also through the accountant packages, right? That they use different software of that, right? Your system works with all of the above?
We currently integrate with 17 major accounting systems like QuickBooks, Online, Xero, FreshBooks.
Okay. And those would be the ones I think of as being kind of self-managed, right?
Yeah, self-managed, or what we have seen that once you go to mid-market like Oracle NetSuite or Sage Intacct, those kind of, then you have a CFO kind of person, who
right.
they might be doing cash flow forecasting today in an Excel sheet, that someone built based on a macro or template or I talked to a CFO few weeks ago, and she got an Excel sheet. She was very scared to change it because the macro that the previous CFO built, they were working flawlessly for her, and she didn't want to change. But
wasn't broken.
Yeah, and no one wants a heart surgery unless you have to, right?
Right.
Yeah.
Well, looking forward a year or two, I mean, what are you most excited about? What are you most worried about as you look forward into the economy and the stage of your business and your customers and future customers?
We believe it's still early days, and when data is being shared seamlessly with others or among different business platforms, today we see a lot of interest. Where companies, fintech companies, they also want to connect a commerce platform to the payment or accounting system. They are doing their own analytics or something. So I believe the trend will continue on that side, where data will flow seamlessly from one business platform to another platform. And today we know on average a business use anywhere between 20 and 25 software packages. They might have something for accounting, for payroll, or for collections, or scheduling, marketing, sales, and that's what you see when you look at their screen and how many tabs they have open, right?
Right.
And today, that data sits in silo. It's very difficult to connect, look at the let's say Stripe account and Google AdWords account and see what's happening there, whether they're spending money and whether the money is coming into, and look at the QuickBooks as well. But I think that's going to change. These silo system, they're going to connect with each other. That's where we see, and it's going to improve engagement. It's going to improve the onboarding experiences. Today, onboarding sucks, and it's just really bad. I think
Yes.
we need to meet what's expectations that's happening in the consumer space, and that's one of the reason. I was reading a survey. I believe it was from U.S. bank or one bank that only 18% small businesses are happy with their bank. It means rest 82% want to see some improvement, right?
Yeah.
And part of the thing is their outdated legacy technology stack, but they are upgrading. But as we know, it's like moving a ship,
It's a
gonna
huge
take time.
disconnect because
Yeah.
when you talk to the banks, that's really where most of them see the future is in that small business customer, where they see their strengths based on those relationships, based on their balances. But the fact is the business is many years behind the consumer experience today.
Yeah, that's right. That's right. Yeah, and look at what's happening on the on the payment side too. Today you order food, it got delivered to your home in 20 minutes, right?
Right.
Grocery in some companies they're delivering 10 minutes today. But if I want to pay you and it's going to show up in 3 days, and if the weekend is, then think about that, it's going to take even longer, right? So we need to see a lot of innovation on that side as well. And all these kind of things are causing cash flow problems. They need their working capital quickly so that they can invest into growth, and because that's where our key growth of the nation is coming from.
Yeah. Anything else I shouldn't have asked you that I didn't?
I think you covered almost everything.
Great.
And they were all good questions.
Great. Well, thanks for joining us today.
Thanks for having me, JP.
Yeah, great.
Thank you.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.